He's waiting for the bear market to begin. He's been here a while. No, just kidding. Midweek update here in the markets. Growth trade pulling back a little bit. We're seeing a rotation into like more materials and energy on the back of that news that the government's going to take a 10% stake in LAC, the lithium producing company out of Nevada. I almost said NVIDIA, Nevada. I'm dealing with a cold, all that. No, my friend who was sitting in the chair here before, he was helping me work on the lighting. I'm on CNBC tomorrow morning, Worldwide Exchange, and we'll talk about a position that I added to the portfolio at Inside Edge. Wrote about it in CNBC Pro. You have to get up nice and early to figure out what stock that is, but it's related to the AI build out. So yeah, let's just go in. I'll kind of take you on a spin through the markets, see if we can sort of make sense of the pullback that we're seeing in growth, and figure out if we should bail or if we should kind of stick with it. So let's just kind of look at where we are in terms of the calendar. We saw some good housing numbers this morning. Certainly, the expectation that rates are going to drop and people may be able to, as the downward path is here, people may be able to refinance mortgages at lower rates and maybe stimulate the housing market. So building permits beat expectations, new home sales, 800K and 650 expectations, and a prior revision higher up to 664. That should give me the prior reading, but it doesn't look like it wants to. Tomorrow we'll be looking at PCE prices. So obviously a little bit of inflation data coming into the potential next rate cut out of the Fed, which would be in October. This is the final reading of Q2 GDP, which the third and final reading doesn't have as much impact. It's the first two. And then here's on Friday, this is the pricing component that goes into GDP, which is for PCE. And then this is the actual number that the Fed looks at, again, to help set monetary policy. Okay. Other than that, we have Micron that beat earnings that is kind of selling off here on the back of the growth trade selling off. Is we're kind of seeing a rotation, as I mentioned, into materials and energy. It's some staples and healthcare, sort of a little bit, of a defensive play, but here's the sell-off in Micron. So, let's just look at the indexes here, figure out where we are, sort of get our bearings, if we can. Here's the S&P on the weekly. I have a loosely drawn parallel channel here from 2022 lows, the inflation interest rate spike. You have a touch point in September or actually that's October of 22. So we're coming up on 3 years ago. You have a low point here in Q1 of this year. Parallel line projected off of here may give you resistance into the 67, 6,800 region. I'm not, pounding the table on that one, but it's a resistance zone that we may want to look at. And, is this the absolute only way to draw a parallel channel? No, not at all. I mean, you could easily do this as well. I mean, I could go and adjust it this way off of that low, and then you project it off the equivalent swing high, which would be like, oops, come on back. Oh, it doesn't want to work that way. Let me try to redraw that. Remove. Let's go like this. We'll go off the low here, off of there, and then, and then all of a sudden resistance becomes much higher than this. So whatever, there's no right way to draw parallel lines and trend channels and all that. It's a very subjective art. So that's fine. But over on the daily, let's see what's going on here. We have, the freight train one-way move from the October lows. We have several tests of the 20-period moving average, which is in the black dashed here, and then the thinner 50 period is down there. So, we're not anywhere near the 20-period moving average. A little bit of a pullback. If we look at the Nasdaq, which is still, Same thing, not even close to the 50. Forget about the 200-day, and then the 20 is way down here. So, the way I look at it, if I pull the weekly back over here in the NASDAQ, let's look at RSI for a minute. And there's a couple ways you might want to look at this. So RSI and the weekly's hanging out at 68. You could see there's clearly times when the RSI is topped out at 74, 75, multiple times, 3, 4 times, 5, 6, 7, 8, 9 times. So, there's two ways that you might look at that. Just say, well, the price has continued to new highs relative to the February high, but RSI has not yet made new highs. Is that telling you that even though prices are moving higher, the rate of change, the volatility, or the momentum, I should say, is less? Or is it telling you at a different message that we still have room to go, higher prices to make the RSI go touch these previous levels of 74 to 75? I tend to think that's kind of it's the latter situation, that there's still room for this weekly RSI to move higher. Now, over here on the daily, again, just because an RSI gets into the 70, 75 doesn't mean it's time to sell off. I mean, RSI went from deeply oversold here in April up to overbought here in May, and then remained overbought throughout the entirety of the May to August rally. Set back here in a little bit of summer volatility, and here we are again. I mean, could it ride the upper rail into the 70s as the weekly RSI goes up? Yeah, absolutely. So, the way I look at it, like I'm not aching to get out of my growth trades. Okay, we have a little bit of a pullback going here, and I don't mind showing you the portfolio here in Active Ops. Today, I'm off 1.57%. Which is not great, considering the Nasdaq is only down 0.35%, where the S&P is down 0.23%. So not great to be down 1.5%, but the kind of positions that we've had on since we started this Active Ops portfolio, which, by the way, I'm trading in a live managed account at Inside Edge Capital. It's open to investors. Since then, Savvy Trader has us up 43.28%, with the S&P is up 26.4 since April. So, it's obviously high beta, high growth names that have carried us, to that kind of outperformance. And I can compare it against the Nasdaq as well. I was kind of tracking, and then we got after it here in the month of September, separating ourselves from the Nasdaq as well by, it looks like, what, I don't know, 10% or so. So anything can happen. So, I look at some of the positions and we sort by, day return. There's certainly, Credo, which is an amazing stock, semiconductor being pulled back. A Lab's come off a bit. Rocket Lab is sort of consolidating. Axon's been quiet. Palantir looks fine. MP Materials, new stock that we just put on, is off 1.6. And then everything else is fine. Up in the days, Robinhood, Bitcoin, Roblox, and IONQ. I do want to look at that position as well. So it's like, do I want to kind of bail on these positions? I think, based on what I said over here, not really. Maybe some of the reason that we're seeing a pullback in the growth trade is there's a bit of a rotation into, as I mentioned, the energy, the materials, some of the utilities, a little bit of a safety trade today, coming from a very overbought market. I think it's oddly has to do, I think, with this Trump administration's announcement of a 10% stake in Lithium Americas, right? Symbol LAC, it's a 10% stake. So this is a lithium mine in Nevada. Okay, it's a $2.25 billion project by the Department of Energy that's going to back this 10% stake in LAC in the Thacker Pass, I think, lithium deposit, if that's what you call it, in Nevada. It's projected to be one of the largest lithium sources in the Western Hemisphere, with the output that they're going to supply and help build out battery-grade lithium. So they're looking to secure the supply chain for EVs, which, the way Tesla is breaking out, it's amazing. We just got a new Cadillac Escalade yesterday, and it's crazy, like, how this thing self-drives. The business manager, as we're sitting down, we did the deal, we wrote a check, and he hits us up with all the, the after warranties. He's like, this thing is 40% electronics. I wish I took a picture of it on my phone, but it's like all the wires. He's like, there's 2 miles of wires in this thing. It's the most technologically advanced car out there. I don't know if that's true or not, but it's crazy. So it's self-driving. It doesn't really even market that. It does it on the highway. We haven't used it yet, but it's pretty interesting. So with the administration getting involved after they just did with MP Materials, you and I have talked about that. We added that in the portfolio. It's clear that the Trump administration is really trying to secure the supply chain for energies, rare earth minerals. We talked about that with MP out of forgot the place in California, that they're trying to secure that for all sorts of magnets, which is also involved in EVs and defense and stuff like that. So we'll see. So let's take a look at some of this. And the other thing they did was they invested in Intel as well. So the government's getting pretty involved, So before we get into some of the positions within Active Ops, let's take a spin around the macro a bit. We looked at the indexes. Let's just see what the VIX is doing. The VIX is up off the lows, so we certainly made a higher low here as the market is pushing. The VIX is up against 18, 19 resistance. So you could be sure that from August, and I can even overlay this. So as the S&P has made a higher here in the purple line, higher high, you can see that the VIX has made a higher low. So if we were to start to see an 18, 19 VIX, okay, that's going to start to say that, some people are paying for option protection at the money. And, it might be a sort of a lead indicator that perhaps, my lack of caution, I would say, based on this is maybe not correct, and we need to look at something more of a deeper pullback. Let's take a look at some of the macro stuff as well. As I just mentioned, here is the 10-year yield. Okay, so the decimal points is off by one here in Thinkorswim. So we got down to about 3.93. The 10-year yield has backed up to 4.1. We've been sort of range bound here in the last 4 trading sessions or so to 4.1. So, I think with that positive housing data, mortgage rates dropping, the chances of a Fed rate cut in October, I think are about 80, 90% right now. I wouldn't expect the 10-year yield to be too much higher than the 4.1, 4.2. So we'll see what happens there. The dollar is higher this morning, or today, I should say. Dollar index gave us a nice double bottom here from the July to September low. And I think that's certainly related to U.S. 10-year yields, as I just showed you, also moving higher. Generally, the dollar tends to follow where U.S. interest rates go, and there's more to that story. It's U.S. interest rates relative to where rates are around the world. It's that rate differential that causes foreign flows with FX. That's another story for another time from my prior life when I used to trade for an FX hedge fund. But the dollar's moving higher off of that double bottom with the 10-year yield pushing back into resistance. I fully expect gold to be under resistance and under pressure today, and that's exactly what's happening. This is kind of a case where higher dollar, higher rates hurts the stock market a bit, which is happening particularly in the growth trade. And that's what creates a positive correlation with gold. And people don't want to get that. They don't get it. They don't want to get it. But a lot of times that's the case. That's why gold and the stock market have a positive correlation through all the macro relationships. So gold's off today. Let's take a look at GDX. Same thing. Moving significantly lower. Bitcoin is actually up today. Interesting. So Bitcoin's up 1.97%. Ethereum did back down to this orange support level, which was the old highs from, what is that, February of 24, December of 24, breakout here in August, and we're pulling back to support. So we'll see what happens. That looks to be the 50-period moving average on Ethereum. Daily chart, let's take a look at crude. Crude's up, so there you go. Also kind of pushing that energy trade higher. Crude oil is up to 65 again. No, nothing crazy, not breaking any resistance levels or anything, but just off the lows, about 61. What's Brent? Brent's up 2.4%. Same deal. Natty gas is flat. Here's copper. Copper's up. Boy, that's an ugly chart. what's the copper ETF? JJC. I think it's JJC. Yeah, that's copper ETF. I was kind of related to that rotation in materials I mentioned. I was looking at Southern Copper. Nice yield on this. Really looks like we have a kind of a breakout happening here. I'm liking Southern Copper. But back on this, so that's copper. Let's also look at some of the sectors here. So here's XLE energy. XLE is pushing higher. Okay, this is the energy ETF starting to push, not by any means a bullish chart pattern here at all, but, yeah, pushing the upper range. Could we have some kind of downtrend resistance coming in? Maybe. Boy, that's an ugly chart, though. That's really ugly. Okay, so maybe you're starting to threaten some downtrend resistance there. So that's XLE, XLB. Materials actually lower today. Energy's up. Utilities are up 0.83%. Utilities look good. Consumer discretionary's up a bit. And no surprise there. XLRE is down 0.5% with those rates pushing up. So you know what? It's just, I don't know. It's just kind of it's a profit-taking day as we're seeing some rotation into, as I said, some more of the value trades. Is it enough to want to abandon everything? I don't think so. So let's take a look at some of the positions that we're holding in Active Opps. Okay, so here's where we are today. Bitcoin, as I mentioned, is up. Roblox is good. I'm going to kind of spin through these. Roblox looks great. This is daily. This is weekly. Robinhood also just looks awesome, especially with crypto bouncing back. Robinhood's up at highs. Shopify actually looks good as well. We kind of went up and tried to do a double test up here after holding the 20 period moving average. Double test to 155 looks fine. Vistra also potentially backing away from a test of a break at about 216. That's fine. I do want to look at IONQ. We did move up to the 1272 extension of the decline in 2025 at 74.5, and that was my upside target. We are long from what? Right there. So we're up 68%. So we're long from 44.38. So 44.38, which is right here. We got a really good entry on this guy coming out of that downtrend break. Actually preemptive move right there. So we've got the whole move. We're starting to kind of respect that 1272. So I'm going to be watching that one really, really closely. But it is kind of hanging in, and you could just see the shape of this little daily candle right here. And if we get into the 5-minute, you're going to see a round trip. So we opened up here, sold down to 10 o'clock, higher low into noon, and here we are here. So, that's why we have that big old tail on the daily bar, which is right there. So, it's all at that 1272 extension. So I'm gonna watch this one. Some of the quantum stuff just looks absolutely awesome. Like QBTS, I think I really have my eye on this one. Love this one. I mean, just like all it can do is consolidate higher like that. It's pretty crazy. Okay. So IONOQ, good. Vistra, Uber is, I don't love this chart pattern. It's kind of slogging to highs. There's a lot of relative strength in it for sure, but you look at even the relative strength of Uber to the S&P, it's starting to make 3 lower highs here. So, even though it's up on the highs, it's been slogging around in this sort of weird pattern since May. And I think, again, that's why you're seeing these series of lower highs in the Uber SPY ratio, which is right here. So eye on it for sure. MP Materials, I really like. If we can get a break above this pivot at about 76, I'd like to add MP. I have what size allocation? A 3.5% allocation in MP Materials. So if I really like an idea, we'll get up to 6, 7, 8, 9%. So still a starter position. AppLovin is similar to IONQ at the 1272 extension of the 2025 drop. So we're right up into it. And I also have some smaller fib, which is a 1618 is there as well. So 675 is going to be a clustering, and that was my target in APP. I've been in and out of this one a couple times. This has been an interesting one to trade, but there's so much movement in it. Looks like I'm up 34% on it long from 482. Let me make sure that's entry. Average cost right there, yeah. So 482, trading 647, and right up on the highs. So good there. But again, I'm going to be watching, just like IONQ, I'm going to be watching that resistance level as well. I think NVIDIA just looks amazing. If and when we can get the breakout through 180, I think there's, a lot of the analyst community have upside targets above 200. And just don't forget, I mean, this is just insane for a $4.5 trillion company to have earnings projections like this. 294 this year, 438 in EPS. Come here. I'm trying to fit everything on this little 1080 screen. It's so annoying. It's so hard to do. So 48% growth, and then $6 and change in 2026, which is 38% EPS growth in 2026. And, I mean, that's going to take you to a $5 trillion company. So if we can get above 180, it looks awesome. DoorDash looks good. No problems there. Imagine what's going to happen to the margins with DoorDash when we have driverless cars, which is coming. BMNR is one that I just put on. I'm down a good 10% in this right away. I got my finger on the trigger. I want to see Ethereum hold that support, but we're not really. I really want to see in the next day or so, see a reversal here. I'm going to kick BMNR out. FTI is good. Life 360, I've had this stock on. It's like one that nobody talks about. It's one of the stronger stocks out there. We're up 45% on it. When did we put this one on? July 14th is when we put this one on. $68. I took partial profits at 96.88 in LIF, and we're at 90, 190, 99, $100 right now. Okay. Down in the session, Palantir's off, but Palantir had a nice break from this consolidation. So we have the 20 period back above the 50, threatening a breakout again. Palantir's fine. Rocket Lab is kind of sloppy in here. A lot of consolidation in here, but if we can get a move above 55, Rocket Lab is fine. I don't mind adding to that one. Rocket Lab is currently a 6.48% allocation, so it's sizable. But again, if blast off, pun intended, through 55, I don't mind going to 7-8% there. Credo is pulling back to the 20 period moving average. Okay, and that is not unheard of, right? If you bailed out every time you got to the 20 period moving average, you're out here. You're out here. So I want to see what happens. Okay, Credo, we have a good entry on this. Again, unrealized profits, CRDO. What do we have here? Again, this is why, you don't want to get rid of your low cost basis just because you have a pullback to, or even one or 2 days through the 20 period moving average. We're up 90% of the position. So, we have really good cost basis. We've only had the stock since June. It's now September, so we're a long ways away from long-term capital gains. But, to be up 90% of the stock and then have it go from, 175 down to 148, okay, context is needed here. So the rule of thumb that I'm going to use is if we get 2 consecutive closes below the 20-day, I'm going to look to reduce. I'm not going to cut it, but I'm going to start to scale out and turn the temperature down on this. Axon, oh God, I don't like the looks of that. I might start cutting this. I haven't liked the chart pattern at all, and Axon's getting smoked today, so I'm going to start to reduce that. A-Lab's another one. It's kind of like CRDO. A-Lab's a great name. We do have a move below the 20 period moving average, but if we get 2 consecutive negative closes below the 20 period, I'm going to look to reduce. We don't have anywhere near as good of an entry in A-Lab as we do in CRDO, so I'm going to be quicker to manage this one. Okay, so I think that's it. And one thing I think I forgot to mention in the beginning, with the Fed and Powell is, I was reading Ed Yardeni this morning. I really, really like him. I've subscribed to him for years. And he's like, Jerome Powell had his Greenspan moment when he said at the, I forgot what event it was, but he said stocks are richly valued and or fairly highly valued or something like that. That's sort of like the equivalent of the irrational exuberance speech that Greenspan put out there. So I think it's kind of fueling some of the selling in the growth trade today as well. There's a lot of concern with the trailing PE in the S&P going above 30 and selling off. We will cover that tomorrow in the Thursday live stream that is geared for the longer term investors, but this is for the shorter term active ops gunslingers. All right, we're gonna leave it there, guys. I'll see you on the live stream tomorrow at noon, and then CNBC for those of you guys who are up early for worldwide exchange. All right, take care. See you guys.